Hey, Scott, going good over here. How about yourself, Steve? How's it going in California?
It's just fine. Springtime. It's going good. Happy Monday.
Yeah, it's also spring here in Texas. We're getting California weather, so I'll take it.
It is.
Take
It's
it while
spring in Texas too. Oh man, I thought it was
it
just spring in California.
lasts. Funny
Weird
how
how
that
that
works.
works. Dang it.
Okay. All right, ladies and gentlemen, welcome to another edition of the Office Hours. Today's March 25th. I feel like I've been gone for a little bit. Had to skip out on the last one, but I'm back now. So without further ado, let's just get the legal mumbo jumbo out of the way here before we get to the good stuff. Just want to make sure everyone in attendance, whether it's this webinar or any of the other ones that we host every week, just make sure everybody's aware of the fact that all the information that myself and Steve, Andy share with you guys on a day-by-day basis with these webinars is for educational purposes only. Please don't misconstrue this as a solicitation to buy or sell securities. If you do need investment advice, please seek out a registered investment advisor or some other licensed individual that can legally help you out with that type of advice. And so moving forward here, nice little crowd we got going here. Like to see attendance on the rise. So for all the regular attendees, you know the drill here. Bear with us while we tell the new people about the community that we've built around trade ideas, webinars, and support. It all starts with Barry's Trading Room. The trading room opens at 30 minutes before the open. Barry just got a new software up and running. Everybody's loving it. So if you haven't been taking advantage of our trading room, you might want to get in there and check it out. I'd highly recommend it. If you've shopped around trading rooms on the web, you probably discovered that most of them are not free. Now, I'm not even going to talk about quality of content. The thing with Barry's Trading Room is the content is high and the price is zero. So a great place to learn and a great place for advanced traders as well. So get in there if you haven't been using that resource. Of course, today you get myself and Steve with Office Hours. Steve gets the steering wheel on Tuesdays for the 5 o'clock Eastern webinar with the trade of the week. Andy Linloff's going to ride shotgun with him. Come the middle of the week, good old hump day, we like to change it up just a little bit, and we bring in the CEO and founder of Trade Ideas, Dan Merkin, along with our Chief Technical Officer, Mr. Brad Williams. Always good to get a peek at functionality that might be coming down the developmental pipeline. So always entertaining with those two. As far as the 5 p.m. webinars go, Eastern, Andy's going to round those out on Thursday with the Trading Studio, and I ride shotgun with him. And then, of course, our ever popular and growing Friday support session is all the rage. Starts at 11 a.m. Eastern time and goes until typically 2 p.m. So we allocate 3 hours for that thing. So it's anything TI related. I would suspect that next Friday, we're going to have a lot of Brokerage Plus activity since Holly is finally out of the box as far as automation goes. So come one, come all to these 5 o'clock Eastern webinars. And then we've got the TI universities as well. These all begin at 12 p.m. Eastern, Monday through Thursday. We've got Beginners 101 on Monday, 201 Tuesdays, Intermediate Wednesdays, and Advanced 401s on Thursdays. So 12 p.m. start time, Eastern time for all of these. We do recommend that you take these in order, especially when you're new. You'll need what you learn in 101 to fully understand 201, so forth and so on. So all in all, with the Friday support session, we're hosting 9 webinars a week. So whether you're advanced or just starting out, should have plenty of resources to get the information that you need as far as using TI Pro. I always like to show how our user base has grown since we introduced the original and first AI module, which was the Holy Grail 1.0 at the very beginning of 2016. And you can see how our user base has expanded 17, 18, and would expect to see another accompanying bar up here a little bit higher towards the end of 2019. Looks like we're on pace for that already. So once again, Holly's part of the premium subscription. If you don't have Holly, you got the basic subscription. You can always upgrade to get access to all 3 AI modules. Alrighty, on to today's agenda. Typical layout here about market recap, what the overall markets did, Expectations. Hey, if we're going sailing, makes sense to know which way the wind is blowing and how fast it might be blowing, right? I got a couple of things to fold in here, going back to Friday's close, along with what my CC windows divulged today, which were pretty much on the money. We'll get into that shortly. Then we'll do some Holly recap. For you regular attendees, know that we always like to do some risk-on type activities here. But with one of the new functionalities that we've brought to the table with the release of Holly Automation, we're going to spend some time today talking about second entries, what we could call the old stop and go. There's probably one good example of risk on, and boy, it was a doozy. We'll get to that as well. And then we're going to cover setting up the Holly AI tab, familiarizing everybody with how to get that up, how to set up trading instructions, so forth and so on. If we do have time at the end today, I still have some nice range break setups that we'll cover, assuming we have time. If we don't, we'll just save them for next time. I guess it would be a good time to kick it on over to you, Steve, if you're ready to talk about the overall markets and the action or the lack of action, maybe, that we had today.
Well,
if
sure.
you're ready, I'll kick it on over to you.
I'm ready.
And you've got the baton, so to speak.
All right, you got eyes on my screen and the big pink arrow there?
Sure do.
All right, so while you were talking, I kind of drew this arrow and I backed up the chart for the S&P 500 spiders to last Thursday when everything looked pretty cool, right? Well, not so fast. We throw today's mess into there. So, boy, everything looked really interesting on last Thursday. What about the NASDAQ? Thursday, well, we're breaking out, the train's leaving the station, and not so fast. Geez, I was even going to save this for later, but might as well just show it right now. Apple reminded me of like a whale coming up and looking for air above this 200-day moving average here. Took a big old breath, spouted some water, and ducked back under. I mean, quite the fake out is what I'm getting at here, guys. Pretty dastardly price action coming on the heels of the close of last Thursday across the board, and of course in many names as well. I don't know what the catalyst was, if there even was a catalyst. I don't even care, honestly, anymore. You could say China, and I'd probably say, okay. All I care about is the price action. And when we see a gnarly reversal like this, I mean, first off, let's look at the up day. Here's our third volume bar, kind of a weak volume bar breakout. But the reversal day was strong, nothing but a solid day of selling all the way down with a giant candle to the downside. And so what I think today is, come across the board, even in the NASDAQ, we look at the Qs. When we have big movement, typically we see it in a breakout. It's called a go, pause, go, or go, thrust, go, whatever people want to call it. But I don't think I've ever seen something like this. Breakout, next snapping reversal with a pause, and then tomorrow I think really is going to be predicated on what side of this little doji is taken out of here. So we literally could just draw a couple of quick lines. If we take out that low side, I think we're going to see follow through. If we take out that upside, we could see a reversal back up into into the range there. But a lot of times these types of little spinning dojis, the day after something big happens, Andy and I, a lot of times we just call these kind of, a day of rest, a day of pause, a day of, okay, what just happened here yesterday being Friday, today being Monday? What was that all about? That was pretty ominous. Let's just see. And so there was no real confirmation today. And this is what I'm saying is kind of typical. Go, pause, go is the setup, or a 3-day candle. Go, thrust, go. Thrust, pause, thrust, or whatever they call it. This was today. This was the indecision day. So if we take out these lows tomorrow, I think there's going to be some follow through. And then we can look back and say, yeah, it was kind of a go, pause, go to the downside. After, which is what I predicated all of this on, the next snapping reversal when everything looked really rosy and good on Thursday, minus that little volume. Then boom, the big volume spike comes in on Friday, and today, a day of indecision, was still decent volume. So watch the lows of today. If those lows are taken out tomorrow, I mean, they were tested twice today here in the intraday chart. If they're taken out tomorrow, watch out for a possible further downside. If not, that was one real nasty backing and filling, if you want to call it, if this does in fact just dig in and become a higher low. You know, that was pretty nasty if that's the case, but it could be. So I think the takeaway here today is when we have these types of candles, meaning a spinning top or a spinning doji, whatever you want to call it, after a decisive move the day prior to the downside in this case, watch for possible follow through. If we don't get it, we don't get it. That's very likely as well. But these types of 2-day candles, if that third candle comes in and starts trading below today's low, watch out. You'll see many instances on charts where you have a big candle, a day of rest, and then a follow-through day. That's what I'm watching for on the radar. You know, we're back into a jumbled mess here in terms of trying to really choreograph and see where we are in relation to moving averages. We busted back down through the moving average that we held so nicely on that low volume push higher on Thursday, which was negated Friday and today. So there's a mess there. Obviously, this 200-day moving average has held in the past. It would need to hold if we break today's low and hit back tomorrow. Now we're starting to talk about a convergence again here of the 200 and the 50 coming up. That's a possible scenario. But, you know, that was not cool, to put it mildly. Don't see that too often, and it's a real attention getter. Again, I don't really care what the story was behind all that. That type of price action is really really nasty. And again, some of my notes here I'm looking at, I think Apple has always been something the market's watched. That was also a nasty reversal on Apple, and a bit more red in the follow through today. Where it's really getting ugly, guys, is in the financials. The financials actually made a new low in midday today after all of this 4 or 5 days in a row. Like here's a kind of decent example of a big day down, kind of a spinning day of rest, and then a follow through. That could be what we see in the bigger market. One thing of note, though, and I'll talk about it more in the webinar tomorrow on the trade of the week, was there really was not a lot of setups on after that Friday reversal. And what was notable in the bigger scheme of things was the breakout, the breakout of the treasuries, the treasury ETF. This is the 20-year treasury. So this is kind of a proxy for bonds for the most part. But what was interesting is stocks and bonds had been kind of hanging out together, you know, for a while. There was no real directional bias. But when something like this happens, meaning the treasuries broke out on Friday, as remember, here's the Friday candle, that nice breakout, gap breakout above that orange line, significant technical move on Friday. On the heels at the same time, the bonds were selling off. I'm sorry, the stocks were selling off on Friday. It's kind of the possible beginning of a bit of a decoupling, I think. There hasn't been much of a inverse relationship to money flowing into bonds and out of stocks, or money flowing into stocks and out of bonds, which sometimes we see. There's been kind of a paired relationship as of late. And I'm showing you this because I think Friday could have been the beginning, the starting gun of a possible change in assets, the way in which assets are demanded right now for money managers and whatnot. So this is extremely significant to me from a really high 40,000 foot view for the most part. So those are a few takeaways. Big one in the treasuries. Let's keep an eye on that. The financials are not holding up well. You know what is holding up well? Well, the gold miners, obviously a nice candle today. The trade of the week from 2 weeks ago down here, nice basing action, huge. We'll talk about this tomorrow. Huge spike. I think this was some sort of options related. I don't know, but it's now moving nicely. So really defensive in nature again. Treasuries, TOT, and GDX gold are very strong right now as the market's trying to shake off what happened on Friday and figure out what's going to happen. Today was a day of pause, and we'll see. But if that low today is taken out tomorrow, be very aware. And that goes really the same across the board, whether it's NASDAQ or the IWM or the Dow. They all kind of had the same day today. And that is really all I got, Jamie. Oh, Steve, you're asking me to go way above my pay grade on inversions of yield curves and stuff. There's so many more smarter people out there than I. I just look at price action, and I saw an anomaly, a decoupling of the treasuries versus the stocks. And when it gets much deeper than that into inverted yield curves, which a lot of people are talking about, I just leave that to the experts, and I'm not one of them. Not good for financials. Yeah.
Sounds good, Steve. Thanks, man. Okay, let me get it back here. Just let me know when you got eyes back on.
Yep.
Okay, perfect. All right, so Steve was, showing the action and all that good stuff. One thing you have to keep in the back of your mind when it comes to expectations here, which are very important, um, is the close on Friday, right? Everybody was hoping for a close above this level, but it didn't happen like that. Matter of fact, draw a little humor in here. Uh, this is not the close you're looking for, right? So we had Friday, we had the close, we got today, and here are my readings on my big cap compare count window after the first 15 minutes today. So we can see, ended up after the first 15 minutes, not quite 50-50, but pretty close. Could have been 51-49, but here we are at 52-48. So, for those of you who have seen this, maybe you watch it, you've heard me talk about it ad nauseum in webinars. To get anything solid, we have to have typically 55% or better before really any merit is placed upon it. Anything below 55, anything's on the table. So, looking at the market action today, about as seesaw or about as choppy as you can get. So in essence, anytime it's less than 55 on the green side, anything's on the table. We could go up, we could go down. We can see right here, I've got my charts on 5-minute candles so that when we go back and look at the second entries here, it's a little easier to see versus 15-minute candles. We can see 5, 10, 15, we get the CC readings here, not exactly strong, but coupling in what we already knew, which this was not a good close if you were a bull hoping for continuation. So knowing the neighborhood that we're in or the seas that we're in, if we're going sailing, boy, the wind is howling, but it's not going in the direction that we'd like it to, and the seas are pretty choppy, all right? So all this information was gleaned from Friday and the first 15 minutes today, therefore giving somebody who's paying attention the ability to go, I might just have to sit out the first 15 minutes and see what shakes out here. All right. So those were the thoughts that were going through my mind and a few of the other traders that I speak to in the first 15 minutes today. And boy, what do we do? What do we do here? We gravitated on down to these levels before taking a bounce up, coming all the way back down throughout the day, and then finishing about right about the same, almost, give or take. What do we close down today? 0.1%. So having said that, and seeing Holly come to the party early, stacking up a bunch of longs, what I will say about that, because we all saw how Sunrise Movers just boom, she was loading the boat long pretty early this morning. Yeah, she was very eager, and it's not the fact that she was wrong, but it's the timing, right? Didn't let things shake out, so to speak. But why is that happening with the AI? Steve and I were talking about this earlier in the day. I'm like, well, it's kind of like we had two worlds collide today. We had the technical world colliding with the statistical world, which is Holly. Holly's not looking at things in this capacity. Holly's not sitting there going, well, we really needed to close above this level up here in order to go long on the open on Monday. But the statistics made sense. So the statistical analysis yielded one thing, technical analysis and human nature we're looking at another thing. And so that's what yielded the day that we had today. All in all, if we look at the modules over here for a total of 22 trades, not the worst losing day. What do we have here? $1.30, about $1.70 on 22 trades or so. Risk on, and risk off for Holly 1.0. Now, what we can't see in these numbers are the opportunities that were present in the second occurrences today, or what we could call the second entries, right? So let's talk a little bit about that. And we've talked about this on and off throughout the years since Holly has been on the scene here. So let's take a look at some of these. Let me queue up my sheet here, make sure I'm looking at the right ones. So everybody saw right on the open, Roku, first trade out of the gate today, 43 seconds in, coming out of the Neo module. And by the way, Waleed, I saw your question. I will address that shortly here on the Roku. Waleed was asking, well, why didn't Holly pair that gain in risk, or excuse me, profit save mode, and we'll go over that here in just a second. But we can see here the entry that Holly made right there in that opening flurry. We get a boom, 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 a run up, and then in the next 10 minutes, all the way back down to a stop out. So she was up, I think it was what, 40, let's see, I think it was right about 40 cents there, 64.74 up to the top there. Yeah, so she was in the money pretty quickly, 5-10 minutes, and then whoosh, if you didn't take the money quickly, there was no time. Wham, right back down to the stop here. Let me just expand these out just a little bit more since we're having to look at 5-minute candles today. So a stop out, right? But then we had the ability to make a second entry here. And as Steve likes to say, in this case, the second mouse is the one that got the cheese, right? Stop out, dealt a little bit, spent a little bit of time below it, got this doji close here, 5, 10, 15 minutes later, we get that second push through the entry line. When we get to the latter part of the presentation, I'll show everybody how you can set this up in Brokerage Plus if you are wanting to use second entries with Holly. We've got that functionality available in B Plus now. So the bottom line is this: you get stopped out, or maybe you did sit out the first 15 minutes. You know, maybe the things I said earlier have been resonating. Compare counts weren't that strong. Be a different story if we would have had a close above that level on the SPY the other day and positive compare counts, but that's not what we had today. So we get the swoosh, we get the stop out, and then we get the second entry right here. And if we made that second entry, and it was actually in this 9 o'clock bar right here, you know, of course I'm on Central Standard Time, so add an hour for Eastern, never did hit that stop area again.
I have a point I can make on Roku before you move on.
Absolutely, and we still need to address why she did not exit in a profit save or reduced risk mode. But go ahead.
Well, you're showing 5 minutes to help illustrate the re-entry. I understand that. So let's say you did take the entry. Well, like I like to do, I like to manage my trades in a 15-minute time frame. Take a look at what happened there. Look at that, boy. That nice that pullback is what I'm alluding to. A little midday. It really hit it nicely. There it is. I see on the green line. The midday pullback really was supported nicely, letting us know that the movement, the momentum was still favoring the buyers on that support exactly. So I just like to highlight that evidence when it happens, and especially a trade like this one.
Absolutely, and Steve, I got to admit, you've converted me over to the 15-minute time frame. I prefer it myself. It's just a little easier to see these second entries on the 5-minute level here. That's pretty much the only reason why I'm bothering with 5-minute candles today. So Waleed's question was, why didn't Holly take the money up here, right? Well, if it would have hit a profit target, obviously it would have been auto-filled or auto-done, or she would have taken the money. But in this case, the action was too volatile. I'm just going to quickly pull up ZS real quick here. ZS was straight out of Compland. She used profit save in this one, and actually it was a 7-cent loss. Sometimes that happens. Prices change quickly from the time that the command is given. Sometimes the profit save is showing a small loss. Sometimes the reduced risk is showing a small gain. But not to tarry on about that. In this case, ZS, she did execute a profit save. And it's because, here's the entry here, and of course, what do we have here? We've basically got the stock doing nothing. It's moving sideways, all right? And that's typically when Holly is going to execute a reduced risk or a profit save, because it's a time-based mechanism, right? The longer the stock is not moving in the direction that it's supposed to, right, over time, that's when she is more than likely to pull the plug. Roku happened so quickly, it never really did flatten out. You know, here we go, whoosh, and then in 10 minutes, whoosh back down. We're not seeing anything like this. If we were in an area like this, that's when you're more likely to see reduced risk or profit save be triggered. So hopefully that makes sense. And, you know, I like seeing these comments. Steve is saying, so Holly is statistical and not technical, right? And that's a very important realization about Holly. To help illustrate that, let me just pull over the strategies panel. What you guys are seeing right here are all of the blotters for the respective modules. We got Holly 1.0 here, all the trades for 2.0, which was silent for a large portion of the open today, and then we have Neo down here. So when we pull the strategies panel over here, here's where we can see all of the respective modules, and we just simply point it to the one that we want to see. This one's pointed to Holly 2.0. We can change the segment very easily by right-clicking and switching segments. So, I just wanted to go on a little bit about this, Steve. These are the strategies that each module came to the party with, came to the session with today, and we can see what the win percentages are going into the session based on the analysis that was done the night before, or in this case, Friday evening, for these sets that were ready for Monday morning. But yes, statistical mechanism, statistical back test. That is what Holly is. She's a statistical machine, and that's how the decisions are made. So from a statistical standpoint, things looked really good. Going back to the illustration of the SPY, these are things that the AI does not take into account. It simply looks at the optimization that it's done and what the statistical probability is. And while we're on that topic, for example, Holly Grail only came to the party with 4 strategies today. 2.0, 1, 2, 3, 4, 5, and Neo had its little selection of strategies as well. But keep in mind, Holly's got a base of what's constantly fluctuating, could be 35, 40 strategies in the base. And tonight, or once we upload all the tick data for all the stocks in the market, Holly will go about optimizing and testing all of those base strategies again, trying to improve upon them. And we've set up a proprietary scoring system. Unless they meet that minimum score, they don't make the cut. So tomorrow we can see some of the same strategies show up for the respective modules as we did today, but just keep this in the back of your mind. Holly 2.0, if on support shows up in her in 2.0 or 1.0 or even in Neo, the base was the same when she started, but by the time she gets finished with it, it's going to be different than the one that showed up today based on the statistical analysis and any filters that she added or subtracted to the mix. So it's constantly changing. So Steve, I hope that sheds a little bit of light on that topic there. Okay, so Roku was a really good example of a second entry here. Stop out, come back up, hits the entry line again, and off to the races where the majority of the move happened. What I really like about the Roku today, number one, the volume was strong all day as well, finishing with a relative volume of 1.63, tipping the scales, over 20 million shares traded today, so definitely liquidity there. And then it sets up once again, once we do get up to these levels right here, if you did take that second entry, or you got the nice problem, do I get out of here, right? But after time progresses, what do we have here? We've got this nice little consolidation area right here, and then we sneak back up to the highs. Keep in mind, volume is kicking. Volume's kicking a lot more in the second half of the day than it was in the first half. So my eyes are automatically drawn to this range break, right? We get one signal from Holly with statistical probability. Timing was a little improper on the first one, but if we're playing the expectations game in the first 15 minutes, maybe we jumped in, maybe we didn't, right? But if you did jump in and take a loss there, well, you had an opportunity to get it back here. Then you had an opportunity here to play this second range break, maybe tack on a little bit more, and we see what happened after that. But then, boom, if you didn't take the money, what do we start having here? We get closes right next to that 10 period. We get this guy closing below, and Steve would probably agree with me. Once you start to see, well, actually, let's go over to 15 minutes. Caught myself there. All right. Looks a little bit different here, obviously. Once we get down here, whoosh, I mean, you might have decided to take the money once you crack that level, or just looked over here at the daily and went, you know what? It's kind of topping out up here, with this little range right here. Sometimes the daily is a really good indicator that all the juice has been spent. Might be time to take most, maybe not all of it off, but a majority of it. All right. Pop back in here to 5 and take a look at some more. And a hearty hello to you as well, Mike. Okay, so what else do we have today? We had JKS. Let me find that one as well. Keep in mind, the cool things about the second entries is if it never gets back up to the entry line, you're never going to see it again. So JKS, another example, not near the range that Roku had, but hey, once again, off to the races right off the bat. Another steep decline here. We don't have the smooth action. That's why same thing applies. Holly didn't pull the plug on a profit save. Action was a little too ferocious. We come down here. We spend some time hovering around the stop area, right? Which, we're talking about second entries today, but I think stop areas are going to kind of cover the same ground in the future, or we can start applying some of the same techniques to the stop areas as well. Look at what it did. It just hugged this stop line like it was an entry line. We see a lot of these that Holly spits out on a more conducive day. They'll do this, but they're doing it up here at the entry line before they finally, buyers and sellers become unequal, and then we get the lift to the long side or the short side. But this one, a little bit different, hugging that stop line, creeps back up here, boom, we get that first, we get the second occurrence right here, boom. Then we get the flopping around right at the entry line, a little bit of profit potential up here before we give up the ghost and get below that 10-period moving average, and it goes back down again. So it is a second entry. Was there profit potential? Yeah, up to here, but it's about 50-50. It is about a 1-for-1 trade. The stop being down here, this area right here is about equal to this area. So profit potential in the second entry, but nothing like what Roku delivered, right? Here and here, 50-50. Once again, on a day like today, not that big of a surprise, not seeing, 3-to-1 risk to reward ratios on these second entries here. FTI, that was the next one here. Let's take a peek. Okay, a little bit different, all right? Once again, we get the entry here in the second 5-minute bar, a little bit of profitability before whoosh, back down to stop, spending time below the stop area for about 5, 10, 15, 20, 25 minutes or so. Interesting what happens here. We get above that 10 period again. We stay above it. Slowly but surely creep all the way back up to this level. So this little doji 5-minute candle right here is where we get that second occurrence through the entry line. Now it doesn't play real nice here, but the important thing is no stop, right? We get long here, looks very similar to here, probably thinking, oh no, it's going to do it again. Nope, comes about halfway to the stop area, but then no stop out and off to the races again, moving, a lot higher if you had the conviction to hold this one to the close. What could have kept us in here? Let's go back to the 15-minute time frame. It's hugging it on the 5, which sometimes we get some correlation there. But once again, what do we have here on the 15-minute level? All the way pretty much up into the close. We get a little bleedy here, right? But one more candle takes us back above the 15-minute. So whether you chose to get out of some here or whether you decided to get out here, the second entry was pretty decent on the FTI. Get back to 5. Ooh, let's see. Okay, this next one, AXSM. Let me get back over here. Okay, so once again, the same story because a lot of these were prompted by the sunrise mover strategy. Same action. In the money, flat, stopping out. Creeping back up here after the initial stop out. What do we got? 5, 10, 15, 20 minutes before we go and tag that entry line again. Maybe even right here, all right? Yep, barely above it. So what do we got right here? A little sideways action, but does not come back down to the stop, and then we get some good upside momentum. Get below that 10 period again. If we look at 15-minute, probably going to see more of the same. On this one, a little bleedy in this area right here, and then back above it towards the close. Now, a couple of things to point out. here about AXSM, and this happens from time to time. AXSM, Holly play back here. Stop out, second entry, holds its water, gets us all the way back up to here to 1597. So a nice run here, about a point in that area right there. Now, bonus item, this stock also came across one of my favorite ticker windows. My turbo up family, no resistance, all right? This thing was chugging through it. Why? Because if we bother to look at the daily, which is always encouraged, not only, you know, for our manual plays, but hey, look at the daily on the Holly plays too. See what it's telling us. Because if you did that today, you'll see that AXSM just happened to have the added benefit being out of the box at all-time highs. You know, churning around this little area today, boom, it breaks out. So when we're looking to the left to see where we might run into some resistance, we don't see anything, right? Also, take a look at the volume that was coursing through Axum today. Finished with a rel volume of 5.32. I mean, I've seen worse and I've seen better, but that's not a bad relative volume. Once you're in a position and it's working, that gives us a lot of confidence. Volume on the smaller time frames remained relatively high throughout the day as well. So always keep that in mind. Check out the daily, check out what the relative volume is, because a lot of the times that can give us the conviction to take that second entry and to stay in it and get as much as we can. All right, just taking a look at the time here, looking at the questions here. Let's see if anybody asks anything that I should fold in here. Yeah, Steve, I would not mind dropping my turbo up window into the chat area. I'll make sure I do that before we're done here. Let's see, I think I got through all of the second entries. AXSM have the added benefit of the out of the box and the accelerated volume, but AXGN, I like to call this honorable mention because the pattern is intact. The potential gain wasn't that large, but it's just simply the pattern because technically this met the criteria. Hey, same old song and dance here on the entry, and yay, we're in the money. 10 minutes later, oh no, we're stopped out. Spends a lot of time below that entry level. But this just goes to show you these second entries can occur just like, say, a range break. Some of them happen in the first 30 minutes. Some happen in the first 60 minutes. Some happen 2 hours, 3 hours, 4 hours into the market. Some happen in the last hour. So the only reason I wanted to pull up AXGN, it's not the biggest winner, but the pattern, and it just took a lot longer to get back up to that second entry there. So, you know, when we get up here, we get stopped out. It spends a lot of time under that blue line up here, which was the entry, but eventually it does come up here and crack, goes back down, acts like it's going to stop us out, doesn't get back down to the stop, and churns on back up before the close. There is a potential for exiting for a profit. So these guys come in all shapes and sizes, thin stocks, thick stocks, but just wanted to show an example of one that took a lot longer than the others to eventually creep back up there and tickle that entry for the second time. So while we're on the topic of the ones that did divulge second entry opportunity, well, let's take a look at a couple that did not. And see, this is the cool thing about it. Unless it gets back up there, you're never going to know about it, right? But as soon as we get that second entry, like for example, Disc A, boom, off to the races, stop out, never gets back up there. So if you're using Brokerage Plus for automation, you're never going to get back into it unless it comes back up and tickles that line. So, all the ones here, not AXSM, but like Sticks is another good example, never comes anywhere close. Got close here, but no dice, all right? Let's see here. I was trying to soak up this question here. Can we catch based on volume? I'm not really sure in what context you're asking the question there, Arkesh. Maybe try to reword that and I can circle back around to it. All right, so let's see here. Risk on. Okay, I'm so used to doing risk on here. We're talking about second entries. One prime example of risk on today. Not a whole lot of risk on, obviously, but we do have one example in AYX, and it was quite the doozy. All right. So this one coming from Holly Neo from the strategy straight out of Compland. Looking at 5-minute candles here, let's just go ahead and tighten this back up to 15 minutes. All right, so beautiful entry coming right here. Now my eyes are automatically drawn to that opening high right there because Holly's bringing this to us with statistical probability. Let's go visit what that statistical probability was before it ever came out, straight out of Compland, coming into the session with 60.9%. Now, once again, a good example, a strategy can overperform or it can underperform. Straight out of Compland today came into the session with 60.9% win percentage. Spit out 3 trades and it underperformed today. Only won 1 out of 3. But boy, the one that hit was a doozy. AYX. Holly gives the entry signal right here and then pretty much just off to the races, right? Now on this one, profit save. Looks a little bit different than our typical profit save. You know, I'm sure Waleed's looking at this one going, well, that kind of looks similar to the other ones, the Roku. And yeah, it does, because we just had a stair step up. Maybe, let's see, let's try to get in the mind of Holly real quick here. Let's just shrink the time frame one more time. The only thing I could say is this little flat period right here is what prompted her for profit save, right? And boy, what a nice little profit she did book and risk off, $1.13. Nothing to sneeze at, all right? But look what she left on the table. She left on the table another $1.30 some odd cents. So Holly's getting out on risk off right here. What do we have ever since we've been in the trade? A little sideways action for about 10 minutes from the time we got into it, and then whoosh, exactly what we want to see. Holly closes it out up here. So, you know, not too big of a stretch to go, well, the trade's been working fantastically ever since we got in. I think I might want to stay in this one. If you're not comfortable, or maybe if you're new to the system, it does take a little bit of time to get used to going risk on, which is basically ignoring Holly's risk off exit and going, you know what, I think there might be more left in this trade, so I'm going to ignore Holly's exit and I'm going to keep the position in hopes of making more money. Now, of course, sometimes they fold back over. So you regular attendees have heard me say this a million times, but for the new people, the best way to get to the swing of getting used to risk on and getting comfortable with it is to do what we call the 50-50 method. Hey, I think this one's got some more meat left on the bone, but I want to protect my first lot. I want to make sure that I don't let a winning trade turn into a complete loser. Bad for business, right? So do the 50-50 method. Hey, it's done nothing but go up. Maybe consult the daily a little bit, see what you can see there. But if you make that decision, you can never go wrong going, you know what, I'm going to peel out half my position up here with Holly. Therefore, you're going risk off for 50% of the position, and then try to get more on the second lot and use a break-even stop on that second lot. Worst case scenario, had AYX folded over and went back to the entry line, you're going to flat or maybe lose a few pennies, but you're going to lock in the money on that first lot. So it's still a winning trade. In this case, you would have been rewarded handsomely and made just about double if you held to the close on what you made on the first lot. So keep that in mind. You can see the blue line here. We never would have been stopped out for that break even. So whether you got out here, here, hell, even if you got out down here, you know, you're still making a little bit more. And if you held to the close, you really maximized that trade there. So the 50-50 method is great, especially when you're getting used to going risk on. And, you know, unless it's just something that you feel really strong about, it's not a bad thing to do all the time. That way you don't let a winning trade turn into a complete loser. You lock it in on the first half. Alrighty here. Let me take a look here. Let's just see. All right, we got about 12
We
minutes
do have
here.
one question, or maybe I was spacing out, but on Giverson's
Sure.
reentry on the Holly on the B plus panel,
Yep.
that simple tick of the reentry check boxes.
Yep. And that is next on the agenda here.
Perfect.
Okay. So here we have the AI strategy tab pulled up. If you pull up Brokerage Plus and you don't see an AI tab, all we have to do is say new Holly AI tab, and boom, you'll spawn a new one here. So then you'll be presented with all the strategies from all the modules that made the cut today. And the tick box. This is what Steve's referring to right here. Both for long and the short. So just be sure and select the one that you like to set up here. And of course, how do we set up the trading instructions? Well, we right click and we say, for the base functionality, edit long trading instructions. And then we also have one for edit re-enter long trading instructions, which are basically the same. We have to set up, do we want to execute or trade in risk on or risk off mode accordingly. And then we can also have this option, best of risk on or risk off mode. So what does that mean? Well, that simply means whatever mode is winning in that module, that mode will be selected here. For opening trades, it's always risk off mode. We've had that question come up a little bit, and Andy and I were pondering the other day. I'm like, well, what about the first trade? And of course, Dave confirmed that that's always risk off by default. But as risk on overtakes, risk on it turns to risk on. Then if you had best of selected, then it would set up the trading instructions for that trade in risk on mode. So in essence, these setup panels here for your initial longs and shorts and the re-enter are pretty much identical. But keep in mind, this will only be active if we have the tick box checked up here. So hopefully, let's see, I don't want to butcher your name there, Givenson. Let us know if that makes sense there. And, pretty much here's how we set everything up. When we do have the Holly Strategies tab active, it's very easy to turn off the strategies and turn them back on. If I just drag and highlight, we can easily say, enable or disable the strategies. All I have to do here to turn them on is enable. Then you'll see on. We want to turn them off. All we have to do is disable. All right, got another question. Way to specify maximum number of trades to take. Good question, Victor. All right, so let's go back in here, one of these guys. So a lot of people have asked the question, why doesn't this look like exactly like the trade panel, for example, when I plug my own strategy into Brokerage Plus? All right, so this was developed as a second module, and we're trying to make it as friendly as possible. So, people like myself, we get used to seeing in Brokerage Plus, and let me just give an example here. If I go into one of these other strategies, it's a completely different panel. You can see here, I can limit the number of trades. I can say stop filling after, after 10 trades have been filled. We go back over here to the Holly, and we set up trading instructions. Looks completely different. We don't have that ability. The only way to achieve that right now is to manually turn it off. But keep in mind, this is just the first iteration of the Holly panel. It's not like we're going to stop here. We're going to keep adding functionality. So right now, the only way to limit the number of trades per strategy is simply to deactivate them. Once you don't want to take any more trades from that strategy. Keep in mind, I have been out for a week. Steve, unless I'm missing something here, wouldn't you agree that's the only way to limit trades from the Holly-based strategies at this point in time?
Yes, for now. And then if in real time you want to just shut it off in real time, you would just go and disable that strategy from the main window.
Absolutely, because you can do them all at once, or you can enable and disable them one at a time here, right? So hopefully that makes sense. Yes, Givenson. In risk on mode, Holly's going to have Holly's going to get you in, right? And then, when we're on risk on, there is no stop loss. So, risk on, more risk. It's going to be more up to you to exit that trade accordingly. Okay, another question coming in. Does Holly try to backtest on days similar to predicted market for incoming day? If not, what backtesting is routinely done? Typically, strategies are going to vary. Some strategies are being backtested for 40 trading days. Some are going all the way out to the max of the 60, 61 backtest period. But just keep in mind, the longest backtest that Holly will ever do is the same as you and I could ever do, and that's the maximum backtest right at 61, 62 trading days. And, as I was saying earlier, Holly's not looking at things like we do from a technical perspective going, hey, we didn't close here. It's looking at statistical probability moving forward. So thus the difference between the technical models and the statistical models. So hopefully that illuminates that topic a little bit for you. Yes, Givenson, you can have Holly trade in multiple accounts if you've set it up to do so. When you're connected to IB, and when I say that, they would obviously have to both be at IB. Now, Steve, we can point it to the respective accounts, right? Now, I'm not so sure. I don't know if you'd have to have two different logins if you wanted both of them to trade simultaneously. That brings up a very good question. But you can point to different accounts. As far as one login trading two different accounts without switching it back and forth manually, I'm not sure about that, but that's a good question. And like I said, I couldn't answer that right now. I just don't have the proper information. We could probably dig that up for you. And matter of fact, if you'd like to send that question to info@trade-ideas.com, we'll get it routed over. We'll get an answer back to you as soon as possible for that specific question, Givenson. All right, ladies and gentlemen, that brings us to the end of the hour, and we got all the important stuff covered today. We're going to be going over, this type of stuff with the Holly AI setup and the new functionality that comes online probably in just about every 5 o'clock Eastern webinar moving forward. I did have a couple of setups today. They were pretty few and far between. My no resistance, no support, they were pretty dead today. No big surprise there. We did have some to go over here, but since we're butting up to the end of the hour here, I'll probably just save these for next time. So Scott, if you're ready to walk us out, let everybody know how they can save some money on an initial subscription or an upgrade, we're ready for you.
All right, that sounds good. Let's make sure I'm on. Yeah, I am. All right. So on the way out, let's just remind everyone that we have a great ebook available for everyone. It's free, and Jamie and Steve both contributed chapters to it. It's the 5 ways to win in a post-BTFD market. So go to trade-ideas.com/ebook, put in your email address, and get the download link. It's fast, easy, and it's a great book. It's got 5 ways to win in a down market or rocky market, and we launched the book last year, and it's been successful, and everyone likes it. So go ahead and get yourself a copy of that. We've also got a podcast. They come out weekly, so make sure that you're set up to get the newest one by subscribing. Just search for Trade Ideas Podcast wherever you listen to your podcasts and add us as a subscription, and then you get the newest one. And stay tuned in that way. We also have a product code for you to save this month, March on, all caps. It's case sensitive, but use that code to save 15% off the first month or year of Trade Ideas. That saves you on your first subscription month or year, whether it's a new subscription or an upgrade. So feel free to use that one to do an upgrade from standard to premium as well. Get yourself access to Holly the AI and all the kinds of good stuff like Brokerage Plus access if you have that enabled. Search for QuantBot on Twitter. That is Jamie's Twitter handle. Also, at TodayTrader is Steve Gomez. Trade Ideas Pro is our handle on Facebook. Follow that to share the stuff we post with your friends. Info at trade-ideas.com is the best place to send any of your questions for help, because that goes right into our help desk software and gets routed to the appropriate team member. We're going to have the recording of this up later on tonight or tomorrow morning, so stay tuned for that. You get an email to your email wherever you registered with tomorrow with a link to the playlist where we keep these. Thank you, Steve. Thank you, Jamie. Thank you, everyone, for attending. Talk to you soon.
Thanks, everybody, for attending. I hope everybody has a nice, profitable Tuesday. Bye-bye.
Right. See you tomorrow.
Bye-bye.